$4,000 gold, $51 silver. These numbers should feel like a celebration, but they're not. I mean, for decades, we've heard old timers talk about moments like this: gold and silver in the headlines, price spikes, and of course, the validation that precious metals aren't a pet rock as price finally breaks free. So, why isn't this a moment of excitement? Because deep down, you know, like I know, that's noise. And unlike any other time before, the real signal is louder and much more serious. If you look at a price chart, gold looks like it's been steadily rising for the last 2 years, and that's accurate. But the truth is, it's not about gold's rise, it's about the release of the grip that banks and governments have had on gold and silver. 90 years ago, they banned us from owning it. Then they repriced it. 50 years ago, Nixon put our dollar on life support by, quote, temporarily suspending the gold standard. And for the last 30 years, they've tried to convince us that gold was a worthless relic. Gold and silver are the truth tellers in a world full of lying and scheming political leaders. Don't believe for a moment that those who control the game are helplessly letting the control slip through their fingers. What we've just experienced isn't a price victory. It's confirmation of something much more serious and sinister. They're not losing control. They're repositioning and resetting the game right in front of your faces. The proof? The proof is the fact that they're willing to let gold and silver run free now. With some guardrails, of course. After 90 years of suppressing, banning, and manipulating it, my friends, this should be setting off alarms. And now, for the first time in decades, they're buying it again. Central banks, wealth funds, sovereign nations, even the same institutions that once called gold a barbarous relic are loading up quietly and intentionally. But they don't just do it, they also leave little clues if you know how to look for it. Like the latest recommendation that people should have up to 20% allocated to metals. Really? 20%? So the rough estimates that less than one half of 1% of managers had gold and silver exposure, and now all of a sudden they're supposed to go to 20%? Come on, y'all. Talk about going to 0 to 100 in record time. Wow. Here's the thing. It's not a conspiracy when they really are out to get you. The question is not why is gold up 50% this year and why silver is up over 60%. It feels like a good question, but let me suggest the better question is, why is it happening now? That we're going to answer as soon as I say, what is good, Stackers University? It's so wonderful to have you here with me today. I appreciate your support, and I appreciate investing.com for partnering and supporting my work and bringing you this video today. So why now? What's the real story? Because this is bigger than a collapse in trust of fiat dollars. Every major economy is rushing to increase their gold holdings. It's like everyone is singing the same song, but just in different languages. All of a sudden, they're all like Drake. They got trust issues. Wait, can I even mention his name after what happened at the Super Bowl? We'll have to come back to that later. Let's get back to the lecture at hand. You see what I did there? Some of y'all will get that joke and that reference later on. What we are experiencing is something far greater than a bull market rally. If for no other reason besides us, where in the heck are all the bulls at? It's just us. Oh, they're over in NVIDIA with its PE of 51. Just like boiling a frog slowly, every day becomes clearer and clearer that this is about monetary repricing. It's not just gold and silver sprinting right now and trying to catch up for the last 40 years of low interest rates and price suppression. It's about gold and silver being the bridge from our current fiat system to a digital system backed by real assets. This isn't crazy talk anymore, and it's not paranoia if people are really out to get you. If you haven't noticed, they're out to get us. While everyone is distracted by the headlines and the hashtag, the powers that be, the architects, are busy building the new system. Central banks are diversifying, sovereign firms are rebalancing from bonds to gold, and private investors, smart ones like us, are paying attention and preparing. And if you're like me, I refuse to own nothing and be happy. That's why I've always talked to you about once you get your physical metals in a position where you feel comfortable, you have to shift to mining and commodity stocks because the overfinalization of the world, all the paper promises, the leverage and the debt, it's all breaking down. And I'll quickly remind you of this chart here, which shows the ratio of real assets versus financial assets. And when the liquidity dries up, the zombie companies are going to fall. Real assets will be all that's left standing. And you need to get your hand on as much as you can. I know this can feel very overwhelming, trying to determine what to buy and getting good information and guidance. So I'm going to pull back the curtain a little bit and show you one of my go-to tools. And it's from investing.com, and it's their pro subscription. Because one of the keys to investing beyond buying low and selling high is actually how do you identify undervalued assets? And I rather buy something undervalued and be early to the party than show up to the party and spend half the night waiting to get inside. The pro subscription is so worth the money simply because of how it allows me to compare companies and how I get to choose the indicators I want to track when I'm looking at these companies. But listen, let me tell you this. When I tell you to forget Grok, I'm telling you their Warren AI tool is the business. I started with a simple question just to kind of show you about the importance of metals, but the answer it provides is insane because it almost guides you through a process to help you select the stocks as it provides names and performance and all other information that you need. For example, here's a chart of stocks with their returns upside and as you can see, but pause. And I want you to take a look at the answer to this question about mining equities. Not only did it break down why it was important to invest in them, it actually created a table for me with companies for me to consider. Here's the great news. Investing.com is running a flash sale offering up to 50% off Investing Pro and Investing Pro Plus. And if the 50% wasn't good enough, you get an extra 15% off with my coupon. That's a total discount of up to 65% if you want to access one of my main tools. Click on the link below to claim your subscription and start using Investing Pro today. I get a little bonus for the referral, but you get 65% off and get access to one of my favorite tools. And if you're going to level up your financial situation, you have to invest in yourself, getting the tools you need and leveling up your knowledge in the systems. Because regardless of the day's hottest thumbnails that you might see on YouTube, the system isn't actually collapsing, it's transitioning. It's like destroying an old building. It's a controlled demolition. Like I said earlier, all they're doing is boiling the frog 1 degree at a time, changing rules, refining terms, rewriting the unwritten rules of the game. And when you wake up one morning and you realize the game has changed, it will already be too late to reposition. That's why they're letting metals move, not because they lost control, but because it's in their best interest, not yours. That true price discovery finally happens. When I realized that 4,000 or 5,000 gold and $100 silver aren't the end of the story, I realized that there's a long way to go before I profit or sell or trim anything along the way. Forget the hype that you see here on YouTube. This isn't about an apocalypse. It's about the replacement of the current system. Hear me clearly when I say this. The old system can't function without debt, and the new system can't begin without collateral. Gold is the collateral, silver is the leverage. Central banks didn't start buying gold because they wanted to capture the move from 2,000 to 5,000. They bought and continue buying because they know the price that they're paying isn't close to the future value. And while everyone's continuing to celebrate the price increases, I want you to watch what they're doing, not saying. While they talk about wealth, I'm watching for control and at the unveiling of the new system. Because when they call it a conspiracy, it's usually right before it becomes a headline. So stackers, this is your signal, not your celebration. Stay alert, stay prepared, keep stacking with purpose because they're not hiding the reset from us anymore. They're doing it right in front of you. In the comments section, do you think gold and silver are broken free or are they just finally being allowed to run free? How low could a price pullback go? Or how low do you want it to go? Or simply put an A+ in the comments so that everyone knows that you always stack smarter and never stop learning.